Welcome back, folks. This is a lesson that is typically for my VIP community members. However, I am releasing it to my YouTube community as well. Okay. Now, this is my go-to setup, and 90% of my trades are this particular model. It's my favorite model, and this is what I look for almost every session. Okay. I'm also going to reveal to you how you can confirm your setup and the best entry. Okay. So it's a secret that I've kept. And it's not something that I've come up with. I trade ICT. ICT talks about this in his lessons regarding this topic, okay? And it is one of the best kept secrets. And if a trader is patient and only looks for this setup, which occurs almost every day in any pair, and is a setup that marks every turning point, then that's all a trader needs, okay? And I want you to study this chart and go back and backtest it for yourself. And learn more about this setup from the ICT resources or join the VIP community. Let me show you in VIP, and I want you to stay to the end because I'm going to be revealing to you how I use subsecond charts to confirm my entries. Okay, not yet that you need them, but it helps as a supplement to confirm entries and to get better risk to reward ratios. Okay, inside of VIP, I have a number of resources made available to students. Okay, these are modules, and inside of these modules, you can see these are topics that cover a broad range of setups and algorithmic signatures that you can take advantage of. Now, inside of here, there are tons and tons of videos, all right? And I don't just cover gold, I cover currencies, indices, as well as crypto, okay? And there's a lot of resources that I'm making available to my members inside of the community. And there are a number of high probability setups that I teach. And I also have videos on my own trades. So these are all live trade videos that I have recorded, screen shares, okay? And then I document and talk through each trade. And these are trades not recorded after the fact, right? These are trades that I've recorded while I have entered and exited and managed that trade, all available to students inside of the VIP community. So there are a ton of resources that I make available inside of the community, okay? This could be a course worth thousands and thousands of dollars. And each one of these modules has examples, videos, and examples on setups that are current on that particular strategy. Okay, so I just wanted to mention that. So let's get back now to the setup that I wait for every session. Okay, and time is important, and I'm going to reveal to you everything you need to look for this setup so that you can identify it in real time. But the key is for you to go and backtest it for yourself. Okay, now this is ICT's market maker sell model. Whenever there's a turning point in the market, you'll often see this schematic. So the first thing that I do is I identify the original consolidation, right? You can see that is very clear consolidation there. Then we wait for accumulation, right? So all these different levels are accumulation. You can see accumulation going on all the way to the top, some kind of smart money reversal, and I'm going to walk you through the exact smart money reversal that I look for, okay? And then we're expecting the market to at least come back down to the original consolidation, and often it goes beyond that. So I like to take profits at the original consolidation and then have a runner to the next hour at a minimum, or some liquidity pool resting below, swing low or another fair value gap, okay? Now let me walk you through this setup in detail, right? And this is where the money meets the road, what I look for specifically. So I want you to first notice time, okay? 9:30 is a very, very important time for any market, okay? 9:30 is the New York Stock Exchange open, right? So when I see 9:30 open, and specifically I see that 9:30 has not taken liquidity, meaning that 9:30 has spooled immediately on the open without taking any liquidity prior to its move, I know that move up is manipulation, especially when I know and I can see that there are equal lows. And this is very clear to me, an original consolidation, and we are potentially setting up for a market maker sell model. So I'm looking for the reversal, right? Based on what I've said there, right? Very key is a 9:30 open. I'm giving you the exact time, right? In this video, I've never revealed this kind of exact specifics. And this is what I do inside of VIP, right? I don't reveal these details on my YouTube, right? The details are inside of the private members community, but in this video, I'm releasing it to you, okay? So 9:30 is very key. Typically, if a market's going to move up, it will manipulate first and then start to rise. But when you see the market at a key time start to move up without taking a key point of price action, such as that swing low, which is liquidity, because below that level resides sell stop. So when the market just spools at its open without taking out liquidity in either direction, then I wait for and look for the smart money reversal. Okay, so that's step one. Identify time, identify that the market has moved in a particular direction but has not taken liquidity. And that is more important and higher probability when you can see that it's done that from a level of consolidation and left very clean equal lows. Okay, we know from looking at that the market is at some point going to come back there. And your job is then to identify that reversal point. So I'm now going to teach you how to identify that reversal. Okay, so inside of VIP, I have a number of lessons on a topic called market structure shift. And that lesson is located in this module, which is labeled how to identify reversal patterns. So if I click inside of that VIP community module, you can see down the bottom here, I've got some lessons on market structure shift bullish and market structure shift bearish. And then what I actually do inside of VIP is as I'm trading these markets, I post additional videos on those topics that show that particular lesson in a real trade. Okay, so we are going to learn about the bearish market structure shift in this video. Okay, and that is this candle here, right? That is the swing, the last swing, okay, prior to the market shifting, right? Now, notice a couple of things here. Number one, from that swing low, okay, a swing low has a higher low on either side, okay? That's what makes that a swing low. Now, from that swing low, what should have occurred is the market pull back and continue, but we don't see that. We actually see a lower low form, okay? So that is a lower low, did not take that higher swing point. How do I know that's a lower low? At what point is that lower low? Sorry, not a lower low. How do I know if that's a lower high, right? Let me just repeat that because I misspoke. So from that swing low, we did not make a higher high. We should have gone up and we should have taken that high. We did not, okay? Now, what we've done instead is make a lower high. How do I know that's a lower high? When is that confirmed? When you go below that swing low, okay? And in essence, what's actually occurring there is the market's coming into this rejection block, okay? Now, inside of VIP, I have lessons on all of these different ICT algorithmic signatures, what we call the PD arrays. So if I jump into a module which is called the fundamentals, now the cool thing about, you can see I've got rejection blocks documented here, videos and trade examples and a whole range of things. So there's a lot of resource made available to VIP. That's what makes VIP such an invaluable resource, okay? Now, how is that? So once we make a lower high instead of a higher high from that swing low, okay, we know that lower high is confirmed once we close below that swing low there, okay? That is a confirmed market structure shift, right? And you have to have this in context. We have lots of things that I've discussed, right? 9:30 open, right? And it's not just that it's 9:30 open, but 9:30 open spools up without taking any liquidity. So we're looking for signals of a reversal so that we can trade short to get back down to this original consolidation, right? So you've got to have everything in context, okay? So once we close below this swing low, we have a bearish ICT signature, okay? So already I'm looking for the entry. Now, how do I use sub-second charts to confirm what I'm looking at and be able to potentially get a better entry? Let me talk about that. Let me bring up my 15-second chart. Now, you can get 15 seconds on TradingView as well, okay? But my broker provides it to me, so I would have to use TradingView for it. So I can see the same exact pattern. Original consolidation, we have all this accumulation and some kind of smart money reversal for the move back down to at least the original consolidation, okay? So on this chart, what confirms to me that my thinking is correct is I see these equal lows, okay, on this 15-second chart. So all I'm looking for is a bearish signature at the right time. So as soon as we print this bearish fair value gap, I've taken my short position and my stop is just a little bit above that high. So that is an incredible risk to reward ratio and I'm targeting these lows, okay? So that's how I'm using sub-second charts to confirm my entry, right? This is a 15-second chart. You don't need sub-second charts, okay, but it helps. So as I've said, I've entered short as soon as that's printed because I see a bit more information on the 15-second chart and my stop loss is just above there. And if we measure that risk to reward ratio, so I've entered on the close of that candle, stop above there, right down here and a bit lower, okay? So that is almost a 3-to-1 risk to reward ratio. And in fact, it is 3-to-1 because my exit was a bit lower. Okay, I'm going to show you where that exit was. And essentially, when I get into these positions, I trade down to the start of the next hour, okay? So ideally, what you want to wait for is the market to come back up into that bearish fair value gap or that bearish fair value gap. So there's a few levels, okay? Market can come back up into these sequence of up candles and this mitigation block. That's a mitigation block now once we close through it, okay? We don't get up to there. We don't get up to there, right? But we do get a movement up into the bearish fair value gap. So entry would be on that candle if you're not already in from that bearish ICT signature, the bearish fair value gap, as I was on using a sub-second chart, okay? Now, if you look at the time of that, that's about the start of the new hour. Okay, so 2 minutes prior to the new hour, and within a few minutes, right, the market expands lower. Okay, so that there is the last leg of this market maker model, and the last leg is often the most aggressive. Okay, and you have this swing low, which is what I was targeting, okay? And that's where I took my exit. And notice that swing low was taken right at or near the new hour, inside that first few minutes of the new hour. And that's what I look for when I'm trading market maker models, okay? They are the highest probability setups, long or short, right? But you've got to align everything with time, and you've got to go back and you've got to listen to everything that I've said, okay? The most important is that 9:30 opens, we spool higher without taking any liquidity. That right there is your key to be patient and now wait for the setup, okay? And the setup occurs when we close back below this swing low, which is our market structure shift with displacement. You've got to have gaps, okay? Very, very important. And then you're looking for a movement back up to a bearish signature, right? And that bearish signature is either these two up candles, which is a bearish order block, okay? Or a movement up to anywhere inside of the wick of that down candle, which is our mitigation block at that point, because we have not moved above this high. Had we moved above that high, then that down candle would be a bearish breaker. But instead, it's a mitigation block, okay? And entry is at any of those premium PDRAs, but we don't get up to the high end, and that actually tells me that the market's weak, right? And entry is therefore going to be inside of this bearish fair value gap. As I said, I was using the sub-second chart, okay, for my entry. So I saw these equal lows, and therefore, as soon as the market printed bearish signature, I entered short with a very tight stop above those highs, targeting just below that level. In fact, I was targeting this swing low there. Now, let me show you two more things, okay? So, number one, you'll see often prior to the market taking out a key low, right? So here, I want you to look at the market produced another set of equal lows, right? Now, the market will do that and get retail long, thinking that's the low, and basically will pull back. And that's another entry, so long as you're pulling back into a bearish signature, okay? Notice we're pulling back into a bearish signature. We also have those two up candles, right? We didn't quite get there again, indicating market's weak, right? And that's another entry or an addition to an existing entry, right? Because we have these equal lows, right? So often the market will consolidate just above a previous low and then displace, okay? But my exit was targeting at that level. I did take partials. I always take partials at key levels, okay? So I took partials once we were beneath that original consolidation, okay? And the final thing that I'll say is when you're looking for entries on setups, if you're looking to short, you want to short from premium, okay? So just take your fib tool, measure the low to the high, and this above that midpoint is premium. Anything below the midpoint is discount. You want to be shorting at premium anywhere above that level, and you can see we have a bearish signature in that zone, and that's after we have a market structure shift. Okay, hope the video is useful. Go back, start at the charts, rewind the video, look at everything I've said. The key is time and how we spool immediately at that open without taking liquidity and forming consolidation, at which point I look for the market to want to return to that level. And so as I'm watching this pump up, I know that's the pump for the dump. I'm looking for the smart money reversal. Okay, this is what we do inside of VIP, and I invite you to join. Link is in the description below this video. I hope you enjoy the video. I will talk with you in a future video.